Okay, so many guys. As Lindsay said, I'm fortunate to work at the New Hampshire Coalition for 21 years. I've been managing a variety of different funding sources here. In 1993, when I started, the coalition budget was about $100,000 or so in change. There was 4 staff, including me, and at the time we managed approximately 7 grants, 4 of which were passed through to our member programs. At the time we had, I think, 12 member programs. We now have 14, soon to become 13 member programs because 2 are merging. So I'm not sure what the total agency budget was then, but it was definitely under $1 million. And now our coalition budget is $4.7 million. The coalition office total agency budget is $1.5 million. We have 16 staff. I'm managing 20 grants, 7 of which are passed through to members. We have 1 other fiscal person who is almost full-time. I also oversee 2 statewide databases, a victim services database and an education and outreach database. When I say statewide, these databases are used by all of our member programs for reporting to funders, including the coalition. I also oversee our office information technology, the facilities here in Concord, New Hampshire, and I share human resources responsibilities with our executive director. I supervise 2 staff, our office coordinator and the bookkeeper and data specialist that I mentioned previously. So most of what we'll talk about today is related to federal funds. We'll spend a good amount of time on specific resources, procedures, and policies that you can use once implemented to help sustain your organization, your coalition. After each section, as Lindsay said earlier, we're going to pause to answer any questions that you might have put up into the chat. We're hoping there'll be time at the end of the webinar to open up the unmute so that all voices can be heard and you can ask questions of me directly. First, we're going to discuss financial legal requirements as it relates to management of federal funds. We'll talk about internal controls, what they are, their purpose, and preparing your board for accomplishment of their fiduciary responsibilities. We'll also discuss managing grants, what's needed to be in place in order to receive federal grants. We'll talk about budgeting best practices, cost allocation methods, and financial reporting. And finally, we'll talk about the difference between an audit and a financial review and some specifics that you can look for in the language in an audit. I'm going to give you a lot of information today, and some of it may be quite familiar. You may be quite familiar with it already. Some may be new. If you feel yourself getting overwhelmed, take a deep breath. I'm going to take a deep breath. I'm a little nervous. It takes time for an organization to build financial systems or revise or update your systems. If you're able to say to yourself, I'll start or plan to use one item from what I learned today this week or soon, it's really going to be a success for your organization. I'm a finance and grant manager and realize maybe you're not, so if I can help explain or define terms, items, just please let me know. Finance is usually a very concrete topic, and we want to give you some best practices here, but we also understand that not all best practices, financial best practices, are really practical for every nonprofit, and I'll try to talk about that a little bit. I did provide many handouts, and one handout is I think it's called, What are the Legal Responsibilities and Fiduciary Duties of Nonprofit Boards? It goes into detail the duty of care, the duty of loyalty, and the duty of obedience, and how those duties are enacted to oversee the finances of the coalition by the board. We're not going to go into detail with that today. There is a webinar in 2 weeks from now. We'll be talking more about board responsibilities and whatnot. But did want to share with you this slide, which is sort of the specifics of staff and board responsibility. One thing that we've seen over the years is, assisting boards not to micromanage, for them to be careful not to get into the specifics of daily operations. There are exceptions to that. If there's a vacancy in senior leadership or a board member where a board member might need to provide, say, supervision or decision making, because basically the board's fiduciary responsibility is oversight and to understand the policies and procedures that essentially staff help to create. So as staff, primarily it's our job to support the board. Specifically, if you have a finance committee, we support the finance committee in reviewing monthly financials and preparing themselves for the audit and other items. Let's see. So specifically, some management responsibilities and how this slide delineates from the last is talking about the staff making sure that they are providing financial reporting timely and complete reporting, both for the ED and for the board. The staff, as I said earlier, drafting procedures and policies that are the code of conduct, or otherwise known as the internal controls of the agency, providing information that will help the board when the board might be engaging in strategic discussions or planning, and that may impact the financial future of the organization. So wanted to define for you, if possible, which I think I might be able to do, internal controls. And essentially, an internal control is the written policy or procedure of what good financial management is, and that's what the staff and the board will be using to guide the organization. I wanted to give you two caveats before I go a little further into internal controls, and that is to say that the New Hampshire Coalition's documents, some of the handouts that I provided today, haven't been updated to reflect the changes that the Federal Office Management and Budget have made regarding the Code of Federal Regulations. People know those also as the circulars, A133, A122, et cetera. So as I said, the federal government has updated that. Now it's commonly referred to as the Uniform Guidance, but some of our handouts have not been updated to reflect that. So throughout the handouts, you might see our audit referred to as A133. I'll talk about that a little later. So we'll be updating both the handouts and our fiscal manual to reflect the changes that our coalition has been impacted by the change to the Code of Federal Regulations. And we will also be updating our fiscal manual because we enacted a per diem travel policy, and we're also using a lot of electronic fund transfers for payroll and our payables and whatnot. And anyway, getting back to internal controls. Generally, internal controls allow an agency to segregate their duties so that if you have an executive director and a finance staff person, those people wouldn't be doing the same things or have necessarily the same responsibilities and tasks. With internal controls, as far as the design of them, usually that's management, designing the policies and procedures. The staff's responsibility is to implement and carry out those written policies and procedures consistently. And the board would approve and monitor the internal controls, maybe monitor on a regular basis. And also the auditors are going to check your internal controls to see that they're consistent with policy and generally accepted accounting principles. The internal controls for an agency can be difficult when a coalition specifically might be very small. If the coalition may only have 5 or 6 staff and outside bookkeepers employed, for instance, and the executive director is doing a lot, maybe even opening mail and depositing checks and whatnot. And so even if you have another person that you can use in the agency, such as an office coordinator or just somebody else other than the person who's opening the mail, then you're able to sort of, what's the word I'm looking for, allow for a written policy that doesn't have just one person managing and overseeing the finances. So a good example might be that you have a bookkeeper who is not approving the expenses, the executive director is approving the expenses, and that bookkeeper can't sign the checks as well. Only the executive director would sign the checks, but the bookkeeper would be the one that would be producing them. Some folks find that limiting the amount of a check is helpful. For the New Hampshire Coalition, we find it's not particularly practical because, as I said, we're a pass-through to our 14 member programs. That's about $3 million. So any particular quarter's reimbursement to our members, there might be a check that's $60,000. So limiting checks, we found, doesn't really work for us. Other possible internal controls in reference to writing and approving checks would be that there might be a second signator besides the executive director. Another internal control would be that the executive director does not approve his or her own costs, that there the board reviews the executive director's reimbursements and timesheets and signs off on those. There are some more specific examples of internal controls in our fiscal manual. And so I think we can move on to some generalities on what you want to pay attention to in regards to things that you want to know for your state. You may have an Attorney General's office, Department of Revenue, Secretary of State that has the authority over charitable organizations. We have a charitable trust division of our Attorney General's office, and we have rules and regulations from them that we have to follow. So you want to make sure you find out who that is if you don't already know who it is and what sort of rules and regulations there are. If you have a finance committee, and if you don't, I suggest that you and your board create one. One of the things that would be in a fiscal manual or part of your internal controls would be written out how often the finance committee might meet, if what they will see in terms of reports. Typically, the finance committee might actually maintain and update the fiscal manual, so that would also be written up. And again, if you have a fiscal manual, what those policies are that are in there. The policies that I recommend every state coalition have and is maintained in a fiscal manual are an agency conflict of interest. And there are examples in our fiscal manual to see what that looks like. The best practice as far as a conflict of interest policy is not only just to have every board and staff member review and sign them for staff upon employment and for board members upon when they are elected to the board, but also to make sure that that's done annually so that if there's any particular issues that those are made known to the board and management. Also, a whistleblower policy is recommended, and that essentially ensures that if staff reports something to management or to the board, such as perhaps potential fraud or another maybe breach of contract of some sort, that they won't be fired for that report. Another policy that's important to have is your record retention policy. Details the financial or personal records that the agency holds and how they will be retained and for how long. Additionally, you might have or you might employ a financial management calendar. There may be software that your agency has for that. We actually just use an Outlook calendar, and we put things on it such as when our payroll taxes are due, if we have any state taxes, or as I said before, state sort of charitable filings that need to be done. I even put things down there such as a staff evaluation that I need to perform, or we also have our conflict of interest statement requirement annually on there. Helpful if at least your treasurer or your board clerk knows in your agency where your legal documents are, perhaps has copies of them, or if you have a secure site piece, it's not site, but section on your website that the board members can have access to, we recommend that. So financial resources that are good for your agency to have both staff and board on hand and easily able to get are the agency's fiscal manual. And one of the things that I wanted to say to folks is when I started this work, it was really difficult, I thought, to find peers that could help me with policies, procedures, just how to do certain things in nonprofit accounting. And I would say as of maybe 10 years ago, it's become much easier to find resources that are helpful, and such as webinars like folks may have attended a couple weeks back, or maybe it was almost a month ago, on the new uniform guidance that I was talking about that I think it was Ellen Yin Weinkauf helped present. So the resource sharing project of the National Alliance for Sexual Violence, I think if I said that right, and the National Network to End Domestic Violence have so many resources available to us, and so it's just great that we have that we can look towards. But for your agency specific, if you have a fiscal manual or even just a few of those internal controls, I want to make sure everybody knows how to find them and can refer to them. If you have narratives ongoing throughout the year regarding what has been happening with grant increases or programmatic changes in grants, that's really helpful for people to see. Your approved budget is something that everyone should have access to. Any kind of audit or financial review that your agency may have done in previous years past, and the most recent one obviously is going to be the most pertinent. And also the IRS Form 990. The 990 is used by tax-exempt organizations, which I believe all coalitions are, and provides the IRS with financial data on your organization. It's available for public inspection. Oftentimes, I think now it's just de rigueur that it's up on GuideStar. I'm not sure. But it's how the public perceives your organization and how the information is presented on it is how the public's going to look at it. So it's advisable to make sure that your 990 is accurate, and it fully describes your organization's programs and accomplishments. I recommend that your finance committee reviews it before it is presented to, or not presented, but submitted to the IRS. It's going to tell anyone who's interested in a line-by-line fashion what those audited financial statements really mean and what the agency's bottom line is. Back in 2009, the 990 was revised so that it was more of a fiscal governance integrity tool, and it started asking such questions as whether or not the agency has a whistleblower policy. Are there any conflicting relationships? Hence the reason to have a conflict of interest statement. Does the agency document meeting minutes? Were there any changes to the organization's bylaws over the last year? How the organization determines its top management compensation. So it's really become a tool for a lot of other folks who are interested in us charitable organizations to see what we look like financially. This slide, it details our particular fiscal manual, and I think the Resource Sharing Project actually used our fiscal manual in one of or more of their resources. I know that when SASPA, the Sexual Assault Services Program of the Violence Against Women Act, was enacted, some state coalitions hadn't been a pass-through, so they used part of the subcontracting policies, I think, to help folks. So that's in there if you are a subcontractor. But in terms of the sections of the fiscal manual, the first section would tell what the treasurer of the board would perform and how often. If you have a finance committee, what their duties are. If you have an audit committee, how often they would meet and what their duties are. How often reports are produced to the finance committee and to the board. What the annual audit requirements are. Like I said, if there's a 990 review policy. The budgeting process section would be when is that budget information provided to the board? What is your budget basis? Is it based upon the mission, priorities, long-term plans? If there are any budget changes, rules. Accounting system is really quite a catch-all for such things as if you have accounting software, what it is, double entry system, if you have payroll, if it's treated within the organization or and outside of the organization, petty cash and whatnot. The financial practice would be those internal controls that we talked about, cash receipts, how that's received and treated, reconciling bank statements, reserve policies if you have any, subcontracting policies, expense reimbursements, and the like. that actually is the end of our first section, financial legal requirements and internal controls. Lindsay, do you know if we have any questions?
It doesn't look like we have any questions, and just a reminder to the folks on the phone, since we had several people join a little later, you are muted, so if you would like to make a comment or ask a question, press *6 to mute. However, we do ask that we prefer that you put your question in the chat box so that when Pamela stops, then we can field questions in this way. So far it doesn't look like we have any questions in the chat box. I'll give folks a second to maybe press *6 to unmute themselves, but otherwise we'll keep going, Pamela.
All right. So the next section is just a little bit on grants management. I mentioned earlier that the Office of Management and Budget reformed and actually revised and strengthened the federal grant management guidelines, and what they did was they combined circulars and the guidelines so that now it's essentially chapters 1 and 2 of the Code of Federal Regulations.
Pam, I'm just going to stop you for a second. There's been a request to speak up a little louder,
okay.
So that might be helpful.
Okay, so I've turned up my volume and I've tried to move my headset a little bit closer to my voice.
Perfect, much better.
Is that better? Okay, thank you. So what it did was it combined all of the circulars into this one document. And so it combined the circulars for administrative requirements and the circulars for cost principles and for audit requirements and audit follow-up. So you want to make sure that senior staff understands the requirements of each federal contract, including the uniform guidance, and that they can inform the Board of Directors of those requirements should there be an inquiry. One of the ways I recommend staff does this is actually reading every word of any grant application and any grant award terms. You know, the uniform guidance is overall financial management for federal awards, but each grant will have its own specific allowable costs and et cetera. So I recommend that. OVW and also, when I say OVW, that stands for the Office of Violence Against Women, and also the Administration for Children and Families, which is the agency that manages our Family Violence Prevention Services Act, FIPSA coalition grants. They have, and they are required to have, a long list of administrative and national policy requirements that we need to adhere to. So understanding what's involved in the circulars is helpful. Not the circulars, sorry, the uniform guidance. One of the things that we've noted of late, and I can't remember when this particular requirement was enacted, the civil rights compliance is about is some recipients of grants from the United States Department of Justice, so that's going to be Victims of Crime Act and any VAWA grant. There's administrative provisions from the Omnibus Crime Control and Safe Streets Act of 1968 to create and keep on file and submit to the Office for the Civil Rights for review and implementation of an equal opportunity plan. Now, I think most coalitions are actually exempt from that plan because you don't have 50 employees or more, and there are other exemptions that you can look into. I'm pretty sure on the resources slide at the end of this there is a link to this issue, but even if you are exempt from providing a plan, you need to complete a certification form and submit that to the Office of Civil Rights for their review. And this actually should be done each time one of these awards is received. So if you are, if your coalition might receive VAWA Rural or any other discretionary grant, grants to encourage arrest, any of those, pretty sure you need to fill out that certification form each time and submit it. Also, all coalitions are receiving grants to state coalitions and to the tribes, and we're required to acknowledge that we've received the notice, that grantees and subgrantees must comply with the confidentiality and privacy protections of VAWA. That form is available on the OVW website. Other important things to know regarding grants management is if your organization is expending any funds for federal lobbying activities, there is a form that you need to complete and provide to OVW. Here in New Hampshire, we're required by state law to keep separate bank accounts to handle our lobbying wages. And so subsequently, we know in any given week what our lobbying wages are for our New Hampshire-specific activities regarding our payroll. So hopefully other states don't have such an onerous requirement. As I mentioned before, we've got reporting requirements for all grants. For the OVW State Coalitions Grant, you'll be reporting in the Grants Management System, otherwise known as GMS. There'll be quarterly federal financial reports that are due in GMS, and there's also semi-annual performance reports that are submitted into GMS. For your FIPSA Coalition Grant, you'll use the, the Payment Management System, and everyone has to just love that acronym of PMS. But both your financial reporting and if you're requesting reimbursement funds are submitted onto that federal site. In terms of sort of managing those, it's really helpful if the passwords are written down that the executive director or any finance staff can have access to those. Those passwords change on a regular basis, are required to be changed. So making sure that people have access to those is important. I think most people know about their DUNS number. Again, having that handy, having most staff know about it, where it is or what it is, and for it as well. And then there's a system for award management that when you're applying for any federal grant, you need to make sure that your annual registration in that system is kept up to date. And that's another thing that we would put on our grants management calendar to ensure that we're doing that every year. I think I mentioned we recommend staff read all the requirements in a grant application and then also read the fine print in the award to make sure that it's something that your coalition can comply with. We actually keep separate files, both electronic and paper, on each separate grant. So even if the coalition grants are overlapping, we're able to separate it and keep it clear in our own systems. We ensure that staff that are being paid for or are part of any deliverables understand what those are. As I said, we keep that grants management, we keep a financial management and grants management calendar. They're actually kept together. So it would have, as soon as we receive a grant, we put in this calendar what the reporting schedule is for the grant, any work plan delivery dates. We put, as I said, the annual registration for SAM or any state annual registration that we might have. And we combine the two of them. There's also some software out there that I think some folks might have that they could avail themselves to. But for us, it's, as I said, just an Outlook calendar. You want to make sure that you assign who's responsible for what, because you've got grant application writing, you've got submission, you have the budgeting part of that, the grant reporting. A tip I say is to always check your junk mail, because it's interesting what I find in my junk mail, which is literally a notification of an award from some federal funder. So I actually check my junk mail if I can every day. We have a system, and I can't remember the coalition that we got it from, so I apologize for not being able to give them kudos, but we actually use an Excel spreadsheet for tracking outcomes. Used to be in our executive director's head, so that when it came time to produce these semi-annual reports and annual reports, she didn't have a problem writing them, but once she left, we found challenge to get substantive outcomes and the ability to be able to get those reports written quickly. So we have an Excel spreadsheet that has 4 tabs on it, and this way we're able to have staff note as they are doing any activities what it is. So we have 4 tabs. One is training and technical assistance. So any trainings that are provided, it's notated in there of how many people were trained and who they were. The other tabs are systems advocacy, administration, and then the 4th tab is community awareness and outreach. We keep it for 18 months. We add to it when a new grant is received, and then we sort of time that out and start a new one. I think that's the end of our grants management section. I don't know. I don't see any questions. Lindsay, do you?
I do not, so feel free to keep going. And again, a reminder to all of the participants on the line, if you have any questions, please feel free to, or we prefer that you put them in the chat box. I know that we're having some technical difficulties with iLink, so if you're not online and you do have a question, I guess we'll pause for a moment and you can press *6 to unmute yourself and ask a question there. Alternatively, you can also email me at lmm@nnedv.org. We do have a question that just came up. So Pamela, do you have an example of the tracking outcome Excel or Access spreadsheet that you can share?
I do. I'll make sure that Lindsay has that and that she can send it out to you.
Great. So for the participants on the line, what I'll do, for those of you that registered ahead of time, I sent out a package of handouts that Pamela provided, and then I will add that to the package of handouts and send that out once more to everybody that registered and attended. All right.
Do you think you can hear me better?
I do.
Okay.
Great.
So let's talk a little bit about budgeting and reporting. I'm going to talk in general about the total agency budget, talk specifically about some costs, and also talk a little bit about actually grant management, or grant budgets rather. One of the handouts that I provided, let's see, I think it's called Nonprofit. Let's see, Know Your Nonprofit's Financial Strengths and Weaknesses. I believe that this is most helpful in a strategic plan type setting, but it could be for a new executive director if there was a tool like this that had been done in the past for them to look at. It's certainly an exercise that's designed to help provide a data-driven assessment over the organization's financial health. And I do believe that it would help you in preparing your annual budget in a big picture way. And I encourage you as senior staff, board treasurers, and executive directors to consider yourselves as the budget expert. You know, even if you're a new executive director, you're learning very quickly all about your agency, and you are the person who's going to have the best overall sense of the organization. You know, if you've got senior staff that have been there for a while, they also are going to be able to help you in that regard. But another handout that I also provided was the 10-step annual budgeting checklist. And it is designed to give you some real concrete specifics on what to make sure you're doing in reference to, you know, the budget approach, your timeline, understanding, you're developing your expenses and your income. So I encourage you to take a look at that. If you're an executive director who doesn't have a finance background, I encourage you to learn some accounting principles and ask your finance staff who are hopefully presenting you with monthly reports to understand that. In terms of some accounting principles, you know, what is a journal voucher and what is its purpose? What's the difference between unrestricted and temporarily restricted net assets? Why is a grant a receivable, and when is it booked as cash? So there may be some local resources that, you know, that you could find yourself, you could avail yourself of to do that. But I encourage you to just get a real basic sense of what some of those accounting terms and principles are. And the administrative costs of the agency. You can use past history and budgets that can help you learn what those are, and we can talk some more about. We are going to talk more about those and allocating costs later. Hopefully, you've got some accounting software. QuickBooks works well for a lot of folks. We actually have used for years what is known as MIP. It's currently owned by a software company called Abila, A-B-I-L-A, and it is a true fund accounting program. We find it's extremely helpful because we, as I said, manage multiple grants, and within those grants there are multiple programs, and then we also have subcontracted within those grants, and then within the subcontracts there might be some separate financing. So a fund accounting program to that ilk works pretty well for us. And I also recommend that the executive director is reviewing at least monthly revenue and expense reports. So in terms of the annual budget, you can't start too early. I know that's sometimes difficult because we don't know what a lot of our grants or what our projected fundraising might be if we're doing that. But when preparing it, at least 3 months ahead of time, we have a policy that says that we actually present it to our board 3 months prior to our fiscal year. We actually, thankfully, received lots of email updates from our national advocacy folks like NNEDV and the Resource Sharing Project, National Alliance for Sexual Violence, and this really helps us when we're looking at, some of these written assumptions that we've talked about. We look at our budget versus actual reports when we are analyzing what we think the upcoming budget year will be like. In terms of a written assumption, aside from what we think, our increase in VOCA might be, right? We would look at if we had, say, for instance, a 3-year grant, and this upcoming year is the 3rd year, what our revenue amount would be. If we've got changes maybe in our state unemployment tax rate because unfortunately we might have had some claims made. Anything like that you want to make sure you write down in a narrative that is presented to your finance committee and to the board when they're looking at the budget. Understanding each line item is important, where the money comes from, what it's for. Again, that helps you become the budget expert. And working with your accountant or bookkeeper, your finance committee, to create the annual budget and break it down into a monthly budget so that you can create cash flow forecasts and make monthly reporting much easier. So as I said, the Finance Committee should review all the budget drafts. Right now our Finance Committee tomorrow night will be reviewing our 3rd draft, and the first draft the Finance Committee looked at was in February. Our Finance Committee is very active, and I believe that they have a unique perspective over staff. They offer questions and they offer solutions that really assist us. So I really appreciate having a Finance Committee. Another handout was a grant budget breakdown that I provided, and that can help you at times, I think, even with your total agency budget. Looking at, specifics that a particular grant might pay for may inform a piece of expenses in your total agency budget. But also, if you're in a jam and you need to come up with a budget quickly for a grant that's due in a couple of days, I think that this checklist can be very helpful. And when you're reviewing the total agency budget, actually I already said that, so I apologize. One of the things that the New Hampshire Coalition has done for years is we've actually used a budgeted increase of whatever the board decided, even though for salary increases, even though the salary increases are not cost of living, it's based upon merit. And at least then the organization has the ability to award those salary increases based upon merit, and it's budgeted. So I think it's good for the Finance Committee to ask questions about that if it's not evident in the narrative that's provided. One of the things that we've looked at in charitable organizations over the last maybe 5 or 6 years more carefully is really being able to do the job that we're doing, because we often are not compensated for it by federal grants, or if for state coalitions, I know a lot of us don't fundraise, so that there's that. So how can we generate operating surplus? What we found in our state is there are more and more foundations or let's say corporate grants that are actually offering limited time for operating, or even to help with reserves. So I encourage you to, when you can, see if there's anything like that that you can avail yourself of. There is a handout that is the Operating Reserve Toolkit. I can't remember where I got it from. Our reserve policies, we have an operating reserve, we have a capital reserve, and we also have a sort of a reserve policy that was created when our executive director left in 4 years ago, which is actually to help us create a prevention program and also for more sustainability. But so we actually have 3 reserves, which is, I think, a little unusual. But what I wanted to say also about that was when Grace Mattern left, retired from the coalition, before she left, we implemented these reserves. And at the same time, for the first time in New Hampshire, we embarked on a statewide fundraising plan. So, oops, we didn't realize at the time that those were probably 2 extremely ambitious efforts to start in the wake of our executive director leaving. And the operating reserve attainment plan was for to be at a certain level within 7 years, and due to our leadership transitions, we just weren't able to even really think about that until after we've been able to sustain our leadership. So we're going to make that goal of that operating reserve probably within 10 years, but we weren't going to make it within 7 given the circumstances. I get asked about whether or not federal grants can pay for organizational type expenses, and they most certainly can. You do want to make sure that staff looks at the grant solicitation, but specifically the VAWA and FIPSA grants will pay for anti-racism or oppression type trainings and movement work. Even for your board, they'll pay for governance trainings. They pay for financial trainings like this. I would encourage you to not use those grants to pay for food if you have food during those meetings or types of trainings, and maybe use your unrestricted or maybe non-federal grant money for that. You can get permission from the VAWA office, but I think it's just a little easier to try to pay for those out of different expenses, different grants or fundraising. So just talk a little bit specifically about expenses, and that part of which is the biggest part of our budget often. So we can think of cost principles as a cost being whether it's allowable or reasonable or allocable. You can find further information from the Office of Justice Program's financial guide specifically on costs. But in terms of allowability, you want to, again, check your grant to see if that's something that's going to be that you can be compliant with. You want to treat costs consistently across the board in terms of if you can't pay for, a certain person's, well, you can't pay for fundraising, for instance, out of most federal grants, so you're not going to pay for it out of one particular grant and not the other. In terms of reasonableness, the prudent person test has been long used in legal and investment circles. It's synonymous with being reasonableness, and it essentially, the prudent person is the one who has the responsibility for somebody else's money, and in this case, it's funds initially provided to the federal government, and in some cases by taxpayers. So the underlying idea is that a prudent person must exercise due care and skill and look after the money as if it were their own. Market prices, I think I saw that some folks from Illinois were on this call from Coalition, so you can tell me if I'm way off here, but maybe an example in terms of market prices is if you're paying staff person or an advocate, $18 an hour in Chicago, but they are the rate or the range there in Springfield is $12 an hour, then essentially in your office in Springfield, you probably aren't going to be hiring that person at $18 an hour. So just want to pay attention to market prices in terms of staffing, consultants and whatnot, and stay in line with that, as well as not to mention staying in line with what your current organization is paying. And to be allocable means that your costs can be allocated based on the portion or percentage of the benefit of what it's received on the grant. So we'll talk a little bit about direct costs and indirect costs. And so direct costs are specific to a grant or program. And one of the things that I think people find surprising is that my salary, a little bit of my salary, we pay for from our rape prevention education grant, which is specifically designed to, it comes from the CDC, Centers for Disease Control, and to specifically help with statewide primary prevention of sexual violence. But we have not had a prevention coordinator here. Fortunately, we do now, and we're really excited. But we haven't had one for years, and so I am actually doing a little bit of programmatic work in reference to that. And I also spend a fair amount of time. I find it to be a time-intensive grant to manage. So approximately 2 hours of my time is directly charged to that grant. It's not an indirect cost. But indirect costs are important. They're necessary. There is an understanding from most folks that you can't do you can't run the coalition without it. So we do, in fact, charge the Rape Prevention Education Grant some of our indirect costs, such as the insurance and the maintenance and repairs and whatnot. So you want to determine an acceptable range when you're looking at indirect costs. There isn't one standard that's used by all nonprofits. The next slide, I'm going to talk about some of the methods used for determining indirect costs. It's helpful to build your indirect costs into all your funding sources. There's very few that don't allow it, but there are a few, so you just want to make sure you figure out which ones are those. So one of the ways that an agency can apply their indirect costs, such as the insurance, mortgage and rent, maintenance and repairs, et cetera, is by negotiating and receiving an indirect cost rate by a federal agency. If you are interested in that and you do get a rate approved by a federal agency, you need to have it also approved by OVW and the Administration for Children and Families. And it's applied to all of your federal grants. There is also something called the de minimis rate. Good description of that, because I'm not going to go into it in detail, was provided in a webinar recently that was called the New Uniform Guidance. And you can get information on how to access that recording if you're interested in more information on the de minimis rate, probably through Lindsay or the Resource Sharing Project. But essentially, that talks about it being, meaning the de minimis rate, 10% of your modified total direct costs. If you do choose to use the de minimis rate, you must use it for all your federal awards. It's good to develop a system, no matter what it is, and have it written down. That would be part of your internal controls. The coalition here, we've never applied for an indirect cost rate, and we don't use the de minimis rate. We generally apply across a grant per the percent of the revenue each grant contributes to our coalition office budget. So we don't include subcontract figures. We only include the revenue that's pertinent to the coalition office operating, so that $1.5 million that I mentioned earlier. And so this ensures that any cost, we also ensure that any cost is allowable per the grant. So for instance, we actually have a mortgage and we're not allowed to charge VOCA. VOCA doesn't pay for mortgages, so we have a VOCA grant here and we can't charge that. But all the other costs like insurance and maintenance and repairs and whatnot, we charge across this method, and it actually turns out to be 1 or 2% of the total grant revenue. So we're not anywhere near the 10% or any particular grant that would say you can only charge 7% for administrative costs or 5%. So it's worked out well for us. Other factors that you might want to consider in developing a indirect cost allocation system would be time allocation studies that you do with your staff. The physical space square footage can be used, which is dividing your total square footage of your, the square footage of a particular staff person's office divided by the total square footage of the entire office space. And that's the percentage then that you would charge to, apply to the grant for the rent or the mortgage. There's copier logs or communication logs that might be helpful. And just making sure that you know eventually what those average administrative costs are for your total agency is something to be mindful of. This new guidance that I referred to has asked for strong controls, internal controls regarding timekeeping, but there is less requirement for documentation of those controls, meaning sort of it was required before that you absolutely were able to document not just charging by percentage on a grant, a person's time, but that their activities could be directly looked at and assured to be allocable to that particular grant. So I believe that particular requirement in terms of the documentation of that is no longer there, but it's still recommended that if you already have a system in place, it works for you to show the timesheet and how that staff person's entire activity is reflected by grant, to just keep it. We use a timesheet here at the Coalition that is a specific grant, or each column is a specific grant. So I'm paid for maybe out of 5 different grants. Typically, it's a percentage by the grant. And then we have Outlook calendars that we use because we use it anyway to manage our office activities. And so each person just puts in activities that particular day that they've done. Typically takes us about 5 minutes a day. And those Outlook calendars are signed off every month by the same person that signs our timesheets, which is going to be our supervisor. And so it's worked well for us. It's not time intensive. I know that there's software that folks can use for timekeeping, and if they use that, great. But I do encourage you to sort of keep track of that for a variety of reasons, but at least it's not quite as stringent as it was before. So in finishing your budget, you want to make sure that it gets entered into your accounting software, that you're familiar with that software, that'll track the grants specifically, that you use that system to review reports monthly. You're going to use that so that you can figure out whether or not it's time to request an extension, use those reports, time to request extension from funders, or to move money around for a budget revision. In terms of actually changing your budget, there's a couple of theories out there. One is to never, ever change your total agency budget during the course of your fiscal year. Our auditors and I believe that if there is a very significant change within your organization, you receive a huge grant, don't we all want to have that happen, that has some specific programming expenses that it would lend itself to a revision budget. I think it's helpful to see the change for the board financially, and just that's my theory on that. Once the board approves the budget, if there is a revision budget, I think you'll want to show those two together when there's budget reports. Make sure all the staff has the budget available to them, and board members as well. In terms of reporting, there are basically 4 basic types of reports that you'll want to have either on a monthly basis. As far as the complexity of the coalition budget, your board may not want to see it on a monthly basis. Ours is not. Our board sees it on sees financial statements on a quarterly basis. And for some boards, a semi-annual presentation of statements would be sufficient. You want to make sure that your board is trained on how to read the statements, and that's going to be something that your finance committee can help with. But one of the strong ways that you can see your overall agency position is through a balance sheet or the statement of financial position. The monthly statement of activities is another common report. The statement of cash flows is common. And then there's an agency budget versus actual report. We'll also talk about dashboards, which is a much higher level report for a board to look at and isn't as steeped in financial language and figures, for that matter. I do have a handout for you called Questions Board Members Can Ask About Financial Statements. They doesn't have to be used just by board members. A new ED or a new finances person might find it helpful. But if you're reviewing, ideally, each month your balance sheet and your detailed expense reports, you'll want to make notes and questions and inquire of the finances staff if you're the board treasurer. Similarly, to inquire of staff at your committee meetings. I'm not going to go into the statement of cash flows because